Hello everyone, my name is Givmo Maguju and I'm a financial analyst at FundMe Capital Private Limited. So in this tutorial, I'm going to show you how to build a multi-spreadsheet financial model. So we are going to use fictitious data and a fictitious company name, that is XYZ Investments, right? So in this sheet, I've got the data, that is the income statement data. I also have got cash flow statement data. I also have got balance sheet data. Okay, so without wasting time, let's dive right into it. So we are going to start by creating multi sheets, or the sheets that we are going to use in creating this financial model. So let's do that. So let's start by renaming this tab here. So we're going to name it income statement, and then let's create another one and let's name it cash flow statement, and let's name this balance sheet, and let's name this depreciation schedule or schedule, and let's rename this to be working capital schedule. Let's rename this to debt schedule, just like that. Okay, so we just want to format this we just want to format here. So to do that, I'm going to press Control, or I'm going to hold down Control on my keyboard and press page up to go back to the income statement. So let's just format this. So I will highlight this entire workbook. So to do that, I'll hold down Control on my keyboard and press A to highlight all, and then I'm going to change the font type and the font size. So to do that, I'm going to hold down Control on my keyboard and press 1 to access the formatting panel, and here I'm going to go to font, and then I'll choose Arial, and I'll choose Arial 10. I think that will be fine, and then I'll increase the width of these columns. So to do that, I'm going to press Alt H O for orientation, and then I'll choose W for column width, and then I'll set 10 the column. I'll set the column width to 10, just like that. Perfect. And yeah, that's it. And then I'm going to move to the cash flow statement tab or sheet. So to do that, I'm going to hold down Control and press page down, and I'm going to do the same. Control 1, and I'll choose Arial 10 regular, and then I'll press OK, Alt H O to set the column width, and then that's done. And I'll press Control page down to move to balance sheet. I will highlight the entire sheet, that is Control A, and then Control 1 to access the formatting panel, and I'll choose the font size 10, Alt H O W, and I'll set the column width to 10, and I'll hold down Control, page down to go to depreciation, and then I'll press Control 1 and choose Arial, then font size 10, and Control page down, Control A, Control 1 to access the formatting panel, and I'll choose the font size to 10, and Alt H O W, then 10. Let's make sure if we have changed or if we have set the column width in the depreciation sheet. So let's just go back, Control page up, then I'll highlight the entire, then I'll say Alt H O W, so we didn't change that. Then let's go to debt, Control, hold down Control, then press page down, then highlight, Control A, Control +1 to access the formatting panel, and then we choose that. We set the column width, Alt H O W, then we set column width to 10. So perfect. So far so good. So if we can go back to the data schedule here, right? So now we want to copy the income statement data and paste it in the income statement sheet, and the same for cash flow statement data and balance sheet data. So let's just do that. So I'll just copy this data. So to do that, I'm going to hold down Shift on my keyboard, and I'll press the right arrow until I get to 2022, and then I'll press the downward arrow to highlight up to row 26, and then I'll release Shift and I'll press Control C to copy this. So now I'll hold down Control on my keyboard, I'll press page down to get to the income statement, and I'll just go to this, I'll just go to row 2, and then I want to paste the data as values. So to do that, I'll press Alt H V S, and then I'll choose values just like that. So that's fine, and let's bold the income statement there. That's it. And yeah, let's format the data here. So we're just gonna highlight the entire up to row 25, and then I'll press Control 1. So let me reselect again, highlight this, and then I'll press Control 1 on my keyboard, and then I'll go to number. I'll choose 1 decimal place. I'll choose this, show any negative number in brackets. Perfect. So that's what we've just done here. So perfect. And yeah, so let's continue to paste the data. So now we are going to paste cash flow data. So we are going to highlight that, and then hold down Shift on your keyboard and Control and then press the downward arrow to highlight that. So you see, when you do that, it will highlight up to row 39. So let's just take the longer route. So hold down Shift and press the left arrow, and now press the downward arrow until you get to row 64, and then press Control C on your keyboard, and then press hold down Control and page down until you get to the cash flow. Go to row 2, that is A2, in column A in row 2. Then let's paste this as value. So the short way I can do it, the shortcut, I can just press Alt ES, and then I'll choose values just like that. And let's bold the cash flow statement heading there, and let's format the numbers here. So let's just do that. Let's highlight that, and then once we are done highlighting, then press Control 1 to access the format panel, and then perfect. So that's what we want. Let's continue to paste the data. Now we are pasting balance sheet data, so let's just do that. Perfect. And then let's press Control C, Control page down until we get to the balance sheet in row 2, Alt ES, and then we choose values there. All right, so let's bold balance sheet. Perfect. Let's format the numbers there. Let's format the numbers. So Control 1, then we go to number, we set the decimal place to 1, show any negative number in brackets. Perfect. So let's continue to format this data, and right, so let's bold total current assets here, and let's bold total assets, and let's italize this. So just press italize current assets heading, so Control I to make any text italic. So let's do the same here. Control I for liabilities and equity, and in fact let's just bold this. So let's to undo if you have italicized the text, then to undo you press Control I again. So let's just bold that, Control B, and let's italize this, and let's italize this. Then these totals, let's bold them. Perfect. Let's bold this, and let's bold this. Let's bold these two totals. Perfect. Now let's, mind you, these are values. These are, we pasted the data is values, so which means this removed any formulas that we had done before when I was preparing the data. So to calculate the total current assets here, I'll press I'll initiate the formula by pressing the equal sign, and then I'm going to use the sum function to calculate the total current assets. So I'm just going to total current assets, and then now, so in fact, for you to actually see what I've done, let me first of all delete the totals here, so that you can appreciate what and understand what's happening. So I'm going to delete these formulas. Perfect. The totals, right? So the total for current assets, I'll initiate the formula by pressing the equal sign, and then I'll use the sum function, and then total this. Then I'll just copy the formula to the right. So to copy the formula to the right, hold down shift and press the left arrow. Once column I row 13 is highlighted, then hold down Control and then press R on your keyboard, and that will copy the formula to the right. So let's do the same here. Let's just add this, and let's just add this. Okay, that's fine. I see this there's a missing figure there for intangible assets. Okay, that's fine. Let's just put a 0 there, no problem. And okay, so let's proceed. So I'm going to say sum, and then I'll add this. In fact, I'll use sum to add the total. Then in fact, what am I doing here? Okay, none. Okay, that's fine. So that row is empty, it's blank, because it has got a heading non-current assets. Okay, that's fine. So I'm gonna total row 4, 5, and 6, and then I'll add the current assets here, and then I'll copy that to the right, and then I'll use a border there. I want to put a border, so I'm just going to add to put a border there. So Alt HB and then P. I'll do the same here. I'll highlight that, Alt HBP. Perfect. And before we forget, let's put the dates there. So if we go back to the data table, we see that our historical data is from 2020 to 2022. So let's go back to the balance sheet and let's put 2020 there, and then let's, okay, that's fine. Then we're gonna do this, okay, +1, then it's gonna be 2022. So let us bold that, but before we do that, let's add another row that here. So I'm gonna say Alt HIR, and then I'll write XYZ balance sheet. Okay, I'm just gonna write consolidated balance sheet, and then the currency type ZW. Perfect. So let's just bold that. So we have bold that, right? Perfect. So let's just highlight, let's show this data that it's indeed historical data. So let's just add an H there to highlight that this is historical data. So highlight, that is, hold down shift on your keyboard, press the left arrow up until you get to 2022, and then press Control. Okay, that's fine. I made an error there, so I'll highlight that, then I'll press Control 1 on my keyboard. I'll go to custom and I'll choose 0, and then I'll write H, a capital letter H inside the brackets there, and now we have got it's now showing that this is historical data. Okay, that's fine. And we just wanna freeze the column, this entire section here, and in the top row, so that when we are scrolling down here, the historical years will keep appearing as well as this side. Okay, so let's just do that. So we come here under G, and then we press on our keyboard Alt W, then press F, and then press F again, such that if we are to go this side here, you see, if we if we keep on pressing the right arrow, then you see that our historical years will go to the left. Okay, will slide to the left. Okay, so which is fine, and that's fine. So now we are done on this section. We are yet to complete that. Okay, let me just italize that. Non-current assets, and let's total our current liabilities. Let's use the sum function, the sum formula, and right, let's add long-term liabilities to current liabilities. So let's just do that. Let's copy that to the right using Control plus R. Then let's total our total shareholders equity. So let's use the sum formula to add that. Perfect. And then let's copy this to the right, and let's total that. So we're going to say total shareholders equity plus non-controlling interest, then we copy that to the right. So let's just total liabilities plus total equity. That's perfect. So let's just add a border there, top border. So we're gonna say old HBP, and we do the same here, old HBP, and we do the same here, old HBP, and we do the same here, old HBP. And here we put a double border, old HB, then U, just like that. Oh yes, that's fine. And yeah, that's fine. So we can just add a row on top of total liabilities and equity, old HIR, just like that. And then we remove the border, a top border here. So say old HB, then N. So let's just add a double border there, old HBU. Perfect. So if you see that our balance sheet is balancing with this figure there, the total assets figure. So the balance sheet formula or equation that we've used there is total assets is equal to liabilities plus equity, right? Then let's go and do the same for the cash flow statement. So let's go to the cash flow statement. Let's add 2 rows there, old HIR, and let's just write XYZ investments, consolidated cash flow statement. So these amounts are in millions, like that. Perfect. Then we come here, we say 2020 plus 1, and we highlight that in bold, and then we add the H so that we know that this is historical data. Perfect. So let's freeze the panels there. So to freeze, Alt WFF. Perfect. So here we want to italize these headings so that we don't get confused. And here, let's italize that, and let's bold these totals. All right, and let's italize that and bold. Let's italize that and bold. We're interested with this, so let's add a row on top of net increase or decrease in cash and cash equivalents. So Alt HIR. So I'm gonna delete row 32 and 33 because we don't want to use it. Even the supplemental disclosure of cash flow, I'm gonna delete that. Alt DR to delete the rows. Then I'm just gonna keep this for now. Just gonna keep this, right, which is fantastic. Okay, perfect. So now we need to delete the totals. Delete the totals. Perfect. And let's work it out. Let's calculate total cash from changes in working capital. So let's initiate that and use the sum, and then press the right arrow up until you get to 2022 and press Ctrl R and put a board on top of that, Alt HBP, and let's add let's use the sum function once more to add the top items, and then we add to this so that we get the net cash from net cash flow generated from operating activity. Let's put a top border, Alt HP. Let's do the same here, sum, and then we add that, and then we put a top border, Alt HBP, and let's do the same here, right, and then we put a top border, Alt HBP, and let's see the changes in cash and cash equivalents. So I'll just put, right, perfect. So this is the changes. So I'm gonna write here changes in cash and cash equivalents, just like that. Okay, so I think let's just delete that. Perfect. And it's looking great so far, right? Perfect. So let's just add 2 rows on top of that. So to do that, let's just write supplementary data or information. Let's bold that, let's italize that, and just that. Perfect. So let's go back here, the income statement. Let's just write XYZ investments consolidated income statement, right? So let's just write the currency type. So normally when you are just writing the heading here, you have to make sure that you put the name of the company that you want to analyze, right? Like they have put XYZ investments, and normally if you write as follows: XYZ investments consolidated income statement for the year ending or year ended. Then you put the year end, the annual period, of that company. The same for the cash flow statement. Then when you are doing it for the balance sheet, you write XY investments consolidated balance sheet is at, okay. right? So let's just add a row there. So XYZ, and then we've got 2020 there, then plus 1, and then perfect. So let's just bold that. Let's highlight and then press Ctrl B, and then let's highlight that and press Ctrl 1 to access the property panel, and then right, just like that. Perfect. Then let's freeze the panels, then Alt WFF, just like that. Then we are done. Let's bold that. So we are going to bold gross profit, we are going to bold profit before, and then we're going to bold this as well. We're going to bold this as well, and then we are going to bold income from continuing operations. We're going to bold this as well. Consolidated net income, right? Perfect. And then going to bold this, and we're going to delete this. We're going to perfect. So now it's looking great, which is fine. Let's add a top row there, and then perfect. So here I just want to add a row there, right? So what this row is going to do is I'm just going to write the operating, so these are operating expenses. So I'm just going to summarize that: selling, general, and admin expenses. So let me just write that in full. So let me just write that. So I'm just saying selling, comma, general, and admin expenses. So I'm just going to remove the bold part of it. So if you are noticing this, you see that we have got selling and marketing expenses, we've got administration expenses, we've got general expenses. So I just want to group these three expenses there into one single expense item, right, on the income statement. So to do that, I'm going to initiate that, and I'm just going to add 5,000 plus 29,500 plus 10,500, so that it becomes 45 there. And I'm going to say 7.5 plus 32,225 plus 12,625, just like that. And then here the same 8,925 plus 42,960 plus 12,750. Perfect. And let's not bold this, right? And then let's delete all these three there. In fact, we are not going to delete, we just cut. Then let's paste down there. Perfect, just like that. And then let's delete these ones. So Alt HDR. Perfect. So right, and we want to start with the historical analysis. We just want to analyze the income statement and then project the income statement. So to project the income statement, let's just copy that. You just want to project it for 5 years. That is so here you see we just want to show that these are forecast period. This is the forecast period. So let's highlight that, and let's press Ctrl 1, and instead of H, let's put an F to show that these are forecast. Okay, and I also want to add a top row. So I'm just gonna press Alt H IR, and perfect. And here I just wanna add a border, like you see we are in column J, right? So in column J, I just want to add a left vertical border there. So to do that, I'm just gonna press Control 1 and I'll go to border, and then I'll choose like this, and then I'll press OK. So now we've got a border there, which is fantastic. And then here I'll write historical, historical, right? Then I'll bold that. Here I'll write forecast, right? And then I'll bold that, so which is fine, which is perfect. So here I'll paste that here, and investments, and then here I'll put that ZW, show that these figures are in millions. Then I'll come here, I'll delete that. Perfect. So this is looking great. And then I just want to put the corporate color there. So the corporate color that I just want to put the blue. So to put the background, to change the background into blue, then I'll just press Alt HH on my keyboard, and then I just want to choose this blue, right? And now you see I can't see what I've written there. I can't see the text. So to do that, I'm going to highlight this again, and then press Alt HFC, that is to change the font color. I'll set it to white, and now you can see that it's visible. But let me just change. Yeah, perfect. I think that's fine. So I've changed that. Or I might change for historical. I might put a different color. Alt HH. Let's put a light one like this, or like that. Okay, that distinguishes these years, so which is fine. And that's it. It's looking great and perfect, right? So we want to begin our historical analysis, right? So to do that, we are going to let's just bold there. So I write like that. Then what we need to do is we need to calculate the year-on-year growth rate. That is the revenue growth rate. So let's calculate that. So to do that, we are going to put a border on top of cost of in fact a row on top of cost of sales. So Alt HIR, and then we just write year growth rate. This is as shown as a percentage. So let's just highlight up until 2027, and then press Control I to italize that, and let's not bold it. So let's control that and press Control B to unbold. Right, so that's looking great. And let's do the same for cost of sales. So we want, in fact, all the expense items on the income statement. In fact, we are going to project them using the revenue. So they are dependent on the revenue. So let's just add a row on top of gross profit, Alt HIR, and let's just write COGS as a percentage of revenue, and let's highlight and then italize that, so which is fine. And let's add a row on top of selling, that is Alt HI, and then let's write gross profit margin, Just want to see the gross profit margin there. Then Control I, then Control B to unbold, and let's so after that, let's add a row on top of profit before depreciation, old HIR. Then let's say SG and A as a percentage of revenue, and then let's press Control I to italize that. And here we are going to write EBITDA, that is earnings before interest, tax and depreciation, which is fine. And let's add a row on top of depreciation, old HIR. Then we are going to write EBITDA margin, right? EBITDA margin is a percentage. In fact, EBITDA margin is a percentage, right? So we're just gonna copy that up until 2027, and then let's press Control B to unbold. And depreciation, we are going to project that, so we leave it like that. Then here we are going to write EBIT, that is now that this is now profit after depreciation and amortization, so that's fine. And let's add a row on top of interest expense, old HIR. Then let's write EBIT margin, and then let's copy up until 2027 and press Control B to unbold and Control I to italize. And we are going also to project the interest expense, so we leave it like that. We are not going to project it based on the revenue or the top line. Then here we have got EBIT, that is earnings before taxes, which is fine. Let's add a row beneath that, old HIR. Let's add EBIT margin, just like that. And then let's copy that to the right, and let's press Control B to unbold. So here on top of income from continuing operations, let's add a row, old HIR, and let's add tax rate. Just want to add the tax rate, so we copy that, then we press Control I to italize that. So it's looking great. Then we are going to project net income attributable to non-controlling interest. We are going to say old HIR, we added row there, so we're going to say non-controlling interest as a percentage of income after tax, right? So that you don't get confused. Then let's just press Control I. Let's italize that, which is fantastic, right? So this is great. This is wonderful. I think we are now set to perform the historical analysis, right? So let's calculate the revenue growth rate, right? So to calculate revenue growth rate, we are going to initiate the formula. We're going to say equals, then we choose the 2021 revenue figure, we divide it by the 2020 figure, we say -1, right? So then we copy the formula to the right, that is press Control R, right? So what we've done, in fact, this formula is the same as we take in fact, we may use this formula like we say the current figure minus, or in fact, some other people say the ending value minus the beginning value divided by the beginning value. It's just one and the same thing. So let's just try that. So we're going to say this minus this, and let's divide this by this, so we still get the 0.2, right? So let's just resort to the first formula. So we said the 2021 revenue figure divided by the 2021 minus 1, right? So this should be in percentage, but it's showing as a decimal, right? So let's just put the percentages there. So to convert these decimal numbers into percentage, we are going to press Alt HP and then Alt H0 to add a decimal place there, right? So we have seen that our revenue grew by 22.3 in 2021 and it grew by 16.5% in 2022. Okay, which is fantastic. And let's put the COGS as a percentage of sales. So to do that, we are going to say we're going to select cost of sales, and then we divide cost of sales by revenue, right? So then we copy that to the right, and then we convert the decimal into percentages. So Alt HP, Alt H0 to add a decimal. And here we calculate the gross profit. So gross profit is calculated as revenue minus cost of sales. Then we copy that to the right. No, okay, that's fine. Let me delete that. Okay, so I think I forgot to delete that. Okay, let me delete the totals here because they are confusing me now. Perfect. And so let's start with the formula, and then here we say gross profit. Okay, that's fine. Gross profit minus this, we get this total, which is the total for gross profit, and then we add a top border there. So let's just add up to 2027 Alt HBP, right? And then let's add a top border there, Alt HBP. Let's do the same here, Alt HBP. Let's do the same, Alt HBP, and let's do, for this one we are going to say Alt HBU, just like that. And for this one we are going to say Alt HBU. Perfect. So this is looking great now, right? So now let's calculate the gross profit margin. So we choose gross profit divided by revenue, which is the top line, and then we copy that to the right. Then we convert it to percentage, Alt HP, Alt H0 to add a decimal. Then we here we want to see what percentage of revenue forms the SG&A. So we divide the SG&A and then we copy that to the right. So Alt H P, Alt H0, just like that. And then we calculate EBITDA, which is gross profit minus SG&A expenses. Then we copy that to the right. Then we calculate EBITDA margin, and then we divide the EBITDA by depreciation. Then we copy that to the right. We convert that to percentage, Alt HP, Alt H0, and then we calculate EBIT, that is EBITDA minus depreciation, and then we copy that to the right, and we calculate the EBIT margin. We divide the EBIT by revenue. We copy that to the right. We convert that to percentages, and then we calculate EBIT, and then we say EBIT minus interest expense to get earnings before taxes. Then we calculate the earnings before tax margin. Then we choose that. We divide it by revenue, and then we copy that to the right. We convert that to percentage, and then like that. And we want to calculate the tax rate, so we choose income tax, divided by earnings before tax, and then we copy that to the right. So we convert that to percentage or to HP or to H0, and then we calculate the income from continuing operations. So we say earnings before taxes minus income taxes, then we get our income from operations, right? So here to get consolidated net income, say this plus this, right? And then we get this figure there, right, which is fantastic. And then we want to project the non-controlling income attributable to non-controlling interest. So to do that, we are going to reverse the sign there. Then we project that as a percentage of income from operations. So we divide that with this to get a percentage, and like that we convert that to percentage. Perfect. So this is wonderful, right? And then we calculate the basic earnings per share. We have got weighted average number of common stock. So yeah, let's just see. We calculate that. So the formula is for a basic earnings per share, we just choose, we just calculate that. We just take this one, this figure there, we divide it by weighted average number of common stock, because that's the consolidated net income attributable to equity holders of XYZ. So that's fine, and then we copy that to the right. So that's earnings per share. So this is how much the shareholders will get for each share that they hold in the company, right? So now, like, if you can take a look here, it's very confusing because all these numbers are in black. So the financial modeling etiquette states that all hard-coded numbers must be colored in blue, only formulas must be in black. So here, if you can see here, these are the numbers that we hard-coded into our income statement model. So we need to change these numbers to blue. So to do that, we are going to say Alt HFC, and then we press M to choose the blue that we want. So let's just choose the blue there. So let's just apply the blue to these other numbers that we had coded into the income statement. So we're going to press Ctrl C, and then we highlight this row there, and then we press Alt HVST to apply the format to all this. Then we want to apply that, so we just highlight that and press F4. Let's just press F4, which is fantastic. F4. So now you can see these ones, F4. This one, it's a hard-coded number, F4. Perfect. So this is fantastic. This is great. So let's just press escape to cancel that, in fact to stop the iteration here. Right, so this is great. It's time to project now our statement, right? So let's just add these rows as percentages, Alt HP, Alt H0. So Alt HP, Alt H0. So here, in fact, we say this is a percentage, right? This is not a percentage. So Alt HP, Alt H0. Then Alt HP, Alt H0. Alt HP, Alt H0. So Alt HP, Alt H0. Alt HP, Alt H0. Alt HP, Alt H0. Just like that. Perfect. So now what we want to do is we want to project our revenue, want to project our income statement, right? So here we just want to project that our revenue is going to grow by 15%. Like, mind you that all these projections, I'm just doing them to help you understand. But what you need to do as an analyst, you need to dig deep into the company's annual reports, read about the company, understand the company, and from there, then you can, assert a certain figure to say, okay, I think this company, its revenue is going to grow by such a percentage, depending on your understanding of the business model. Okay, but for the sake of this tutorial, I'm just putting these random percentages to just help you understand how to create, or in fact how to do to prepare a financial model. Right, so I'm just gonna project that revenue is going to grow by 15% throughout. Okay, right, so I'm just gonna copy that to the right, just like that. And since this number I've hard coded it, I need to change it to blue, so I'll just put blue there. Perfect. And cost of sales, I'll project that cost of sales, they are going to grow by 53.7%. so this is not percentage, alt H, P, alt H0. So I project that this is going to grow by 53.7. Then I'll copy that to the right. So I'll apply that here. So alt EST to apply the same format, that is the same color. Then gross profit, I'll leave it like that. S&G, I'll choose 22.1%. right? So what else? The tax rate, I project that the tax rate will be 12%. Perfect, so 12%. And what else do I need to project there? So I think it's done. I'll just copy the same formatting here, alt EST, and then here I'll just apply F4 to copy that. And here I'll say that this will grow by, let's say, 10%, and then I'll copy that to the right. Okay, then I'll apply that, alt EST, just like that. I'll press escape. Perfect. So now we are set to project our income statement. So let's just do that. And here I'm just going to project that. So let me just add a row there. So I'll write the share buyback. Okay, so I'll say share buyback. So I'll see that in 2022 the company bought back some shares, right? So I'll say, okay, how much did it buy? Like, it bought 96 shares. Okay, so it bought 96 shares, so that's fine. So I'm going to say that, so I'm just gonna copy that to the right to say okay. So let me just do this and then copy that to the right. Perfect. So from now on, the shares are going to, the company is going to keep on buying 96 shares, just like that, which is fine. This is great. And let's change that into blue. Perfect. So now that's great. Right. So this is looking great so far. And let's project our income statement. So let's project our revenue. So we're gonna say times 1 plus the tax, the growth rate, right? And then we copy that to the right. So we see that this is not the same format as this. So to copy this same formatting, we are just going to do what we have done on the percentages, Alt EST, just like that. And I think we need to copy that as well to the other. Okay, so perfect. Let's just Control 1. Let's go to number. Let's choose this. Let's go to this. So here, I think here I can say, can copy that and then paste that. Alt EST, the same formatting there. Or Alt EST, same formatting. Alt EST, same formatting. Alt EST, same formatting. And we do the same here. Alt EST, then same formatting. Perfect. Then we cancel that. Right, so now here what we are doing is we want to see how many, in fact we want to project our cost of sales. So to do that, we are going to say this times this, not that, sorry. We're going to multiply, we are going to multiply this, the revenue figure, times the COGS as a percentage of revenue, the percentage that we set for 2023. So we project that our cost of sales will grow by 53.7, and then we copy that to the right, and then we copy the gross profit there, and then let's project our selling expenses. So we say this times revenue, 2023 revenue, and then perfect. And then let's copy that to the right, and let's copy the EBITDA margin to the right. Let's copy that to the right. We will leave depreciation blank because we need to calculate it. And then here we have got EBIT margin, so we just copy it to the right. And interest expense, we leave it blank. We'll calculate that. Then we just need to copy that to the right. And then here, income tax expense, here we can calculate, can say the tax rate that we put for 2023 times the EBIT. Perfect. So we project that, and then we copy that to the right. Perfect. So we project that in 2023, this company will make net income of this much. So let's just project this one. So we say this times this, and then we copy that to the right, and then perfect. This is what we get, and let's just copy that to the right, and that's 100%. Okay, so we project that in 2023. Equity holders will get 18.6 per share. Okay, that is earnings per share. Okay, so this is fantastic. Now, so we are done with our income statement, projecting our income statement. Now we need to go to the cash flow statement. So let's just press Control down, and here here we are using the net income, right? So our net income is going to, for example, if we go back page up, so the best thing is I will look at these figures and I'll find which line in the income statement contains this figure. Remember that the cash flow statement will start with net income, okay? And the operating activities section, we just it's a representation of how much cash the business has generated from the profit it has recorded in the income statement. Mind you that profit is not the same as cash. So we just want to see how much the business generated, how much cash the business generated from the net profit that it recorded. Okay, so let's just do that. And we just want to take a look which line contains those figures. 5185. So 5185. 5185 was that. 5185. Okay, so I think this should be the line, but I don't know what I did when I was preparing this fictitious data. So what I'll do is I'll just copy this, because that's the line that I need to use in the cash flow statement. Normally you have to check in the income statement which sometimes some companies, they use profit before tax, some they use profit after tax, so it just depends. So I'll just paste that as value. So I'll just paste, let me just see here, or let me go back to the data and see what happened. So I'll come to the data. We have got 5180, this 5970. In the cash flow statement, we've got 5185. So there was a mistake there. But anyway, let's just work it out and see what. So let's just paste that old ES. So let me just go back and copy these figures once again. Let's say old ES. And then I'll paste that as values, right? So I'll paste that as values, right? So this is fantastic. I've pasted that as values. Let's just recalculate this figure. So sum, and then we sum up this, we say plus this one. Perfect. Then we copy that to the right. Then we copy that to the right. And here what we need to do now is to, link that to, we want to link this net income line item to reflect the net income that we are going to get for the years that we have projected in the income statement. But before we do that, let's just copy that. Let's just copy that so that we get to 2027, and that we say old I just like that, and then we paste that on top, and then we say this. Perfect. And we do this, which is fantastic, right? So what else do we need here? We just need to change these numbers so that they reflect the F, right? So that they reflect the F. And here we need to change Alt HH. Mind you that initially we selected this, so here Alt HH, here we chose this Alt HH, then we input that, and then here we write historical, and then here we write forecast. And then Alt HFC, we write that, which is fantastic, right? And yeah, so we are ready now to work on this. Then we come here, and then we link that So we say control page up, then we come on this, and then we choose the 2023 revenue that we've projected. Then let's just highlight that up till we get to this point. Control 1, and then number, show any negative value in brackets. So perfect. So now I think if we go back, we can see that that's the number that we've projected. We leave the depreciation there like that. Then on this one, we just want to take the minimum of this, right? So we just want to take the minimum, and then what we do here, we are going to leave this blank for now and come back later. And let's just copy that. So perfect. So now we need to project depreciation. We need to project changes in working capital items, and we need to project as well. We need to project purchase of property, that is capex, and then this one proceeds from disposal of property, plant and equipment. Right now we are not sure whether in the next at the end of the next financial period the company will sell property, plant and equipment, so we project it to 0 because we don't know. Then investment and business acquisitions, this is an item based on cash available. So a business can only invest in can buy, let's say, financial securities, or business can acquire certain business if it has got cash. If it doesn't have cash, then it can't do that. So we are not sure yet whether the business is going to purchase investments or to do business acquisition. Project it to 0. So we copy that to the right, and then say Alt HFC, and then we choose that because it's a hard-coded number. So now we need to project purchase of property, plant and equipment. So to do that, let's just add a row on top of proceeds, Alt HIR. Then we're gonna say capex as a percentage of revenue. So we just wanna project that as a percentage of revenue. Perfect. So let's just project that. So let's just put that as a percentage, Alt HP, Alt H0. So let's just do that. So to do this, we are going to say we're going to initiate the formula there. So we are going to flip the sign there, and then go to the income statement. So let's go to the income statement. Let's do this. Perfect. So now we see, okay, so here we're gonna choose 9.7. That's the rate that we're going to choose, and let's put it since it's a hard-coded one. So to project revenue, now we are going to say negative 9.7 times 2023 revenue. So that's, now we've projected our revenue. So let's recalculate this line there. Let's sum this, and then let's add this. So in fact, we can just do this. We can say this one plus this sum of, okay, which is fantastic. So this is great, and here we need to ignore this error. So we've projected our capex, Then we come there, we copy that to the right, and proceeds from issuance of long-term debt, we leave it blank, we'll project it. Then dividends paid, share repurchase, so we just wanna project dividends paid, so we say we use dividends per share to project that dividend per share, dividend dollar per share. Okay, dividend dollar per share. So we are going to divide historical dividends with historical average share number of ordinary shares. So we're gonna flip the sign there. Then we're gonna come back to the income statement and then divide there. Right, so we copy that to the right, and here we are going to use 1.2, and then we copy that to the right. So that's the dollar per share that we are going to use to so here we are going to say negative this times so we go back and then we multiply that by shares that we have projected, just like that, so which is fine. And then we change that into and share repurchase, we just multiply that, so we just say negative 75.75 multiplied by this is 23, right? So multiplied by 96, the shares that we expect the common to keep on buying, so which is fantastic. So the reason why I use 7.5, if you go back here, you see that the current share price, so shares, the treasury method states that shares are bought back at the current share price. So I'll go back here, and what else? So I think I'll have to recalculate this, so like that, we add and then we add that, perfect, and then we copy that to the right, which is fantastic. Then here this figure is too volatile, I'll just repeat the cycle there, which is fantastic. So here we just need to change all these hard-coded numbers, especially the historical figures, into blue. Okay, so we just want to say like that, Alt EST format, and then F4 F4, and now I think this is perfect. So this is great for now. Okay, so right, so this is good. Okay, so now we've projected our dividends, we've projected our shares that have been repurchased. We are now we want to project our depreciation, and then we project working capital, and then we project the debt. But this will do it after we are done with the model. Right, so this is fine. And now what we need to do is to project depreciation. So I'll just quickly do that. So I'm just gonna quickly write depreciation schedule or schedule, something like that, and then here we choose say 2020, so this plus 1 and up to to 2027. So let's just highlight that. Let's just use that, not the number, the custom there, and then let's just put that, and here let's just put the F. Okay, this is fine. This is forecast. This is perfect. Then we freeze panels, Alt WFF, which is fantastic. Then here we take the property, plant and equipment. Then here we take capex. Then here useful lives. This is PP&E, and this is capex, and then the depreciation that we are going to calculate there. So the PP&E depreciation, we're going to then capex 2020. So let me just do this. I just write capex depreciation. We have got 2023. So I'm gonna say this plus 1, 5, 6, 7. Control D, right, and then I would say Alt HAL. Put that there, and then I'll write total depreciation, just like that, up until this. Then we have to put the top border there, which is fantastic. So here we're going to put the beginning balances. So we're going to say begin balance. So beginning balance. So let me just change that. Beginning balance. Capex beginning balance. Okay, so this is fine, and here we can just choose this, and we just choose like that. So I'm gonna say Alt FC. Perfect. Right, so we just want to start depreciating from 2023. Okay, so we're going to link the property balance from the balance sheet. So let's find where the property balance is. The 2022 end of year property balance is going to be the beginning in 2023. So let's just for this one, Alt 1, let's choose number like that, and then let's add that. Let's choose number. Perfect. So here we've got capex, so we have to flip the sign, and we take the capex that we have projected in the cash flow. Perfect. And then if we go back to the cash flow statement, there's supplementary information. The property is being depreciated using straight line method, that is at cost, and the useful life range is from 10 to 30 years. So let me just come here. So I'll set the this one to 15. I'll set this to 25. That's the years that I want. Perfect. So I'm just gonna bold that and bold all these ones. Same applies with these ones. I'll bold. Perfect. So now let's send that all the HIAs. Then let's depreciate property. So let's lock that and let's lock that. Mind you, we want to charge straight line method charges a uniform depreciation. And then for capex, we lock that and then we lock that as well, so that we can charge a uniform depreciation. Then we lock that. Right, so we lock that and then we lock that. We copy that to the right, so we lock that. We lock the useful life. Right, so here what we do is we lock that. Here we lock that as well. Perfect. Then what we need is we sum up the total depreciation like that. Then we copy that to the right. Then we go back to the income statement, the section where we had depreciation. Then we link the depreciation from right now we have linked our depreciation. We copy to the right and it's updating. And then we go back to the cash flow statement and we link our depreciation from the income statement, and like that we link our depreciation. So we are done with projecting our depreciation. Now we need to project our working capital. So let's just do that. I think we are only left with projecting working capital and the debt there. So let's just go to the working capital schedule. So we are going to say working capital schedule, and then we start with 2020. In fact, let's just highlight that and let's add perfect 100. Then let's change the colors there. Alt HH, and then for the historical, and let's change the colors. Perfect. And let's freeze panels. Okay, so let's freeze panels. Alt WFF. So we have frozen our panels there, and this is the working capital schedule. So we're gonna say current assets, right? So current assets. Then we go back here. Current assets, we are removing cash. So we have got accounts, receivables, prepaid expenses, and other. So let's just go there. We've got trend. In fact, we've got accounts. We've got accounts receivables. We have got inventories. We have got prepaid, expenses and other. Then we've got total, current assets, and then we add a board on top. Right, so let's go to current liabilities. Current liabilities, then we've got accounts payable. Right, let's go back and check in the balance sheet. Accounts, we've got accounts payable, accrued liabilities. Then let's go here, accrued liabilities, and then accrued income taxes. Okay, but mind you that here in the cash flow statement, when we are calculating changes in working capital, we only include items that affect the operations of the business. Like what we are trying to do right now is we are trying to find how many days haven't we collected our receivables, or how many days are our receivables uncollected. And then we've got inventories, like how many days like do we take to order inventory. Then prepaid expenses, how many days have our prepaid expenses remain prepaid, right? Like we just want to try to find, here we have got accounts payable, like how many days haven't we paid our creditors and our expenses, and how many days have our income taxes remain accrued, things like that. So total current liabilities. Perfect, that's 100. Then there's something that I think I need to work on, but it's fine, that I haven't seen there. Okay, which is fantastic. And what I need to do on this is, on this debt, right, this should be only long-term debt. So what I'm gonna do is I just need to total that, just need to say 1035, right? And then I just need to say, I think I made an error there, 4048. Perfect, such that here I can delete that. Right, so perfect. And yeah, so that's it. So yeah, 100. And then I come back to my working capital schedule. I choose accounts receivables for 2021 and 2022. So balance sheet, accounts receivables, that is this. Right, so for now let me just format that, the numbers, and perfect. And here I'll just write receivable days, and here I'll say inventory days. Inventory days, days prepaid, then here I'll say payable days, days accrued, then here it's days accrued as well, or days payable, it's still fine. So here I can say payable. Okay, let's do this. Let's link inventory from the balance sheet. So here's the inventory. Let's link prepaid expenses. And let's sum up that, or let's just add that, and just we copy to the right. Let's link accounts payable. So accounts payable, then accrued liabilities. Let's link accrued liabilities, and let's link accrued income taxes. Let's add that. Perfect. And now it's time to project. So to project that, we're going to say average receivables divided by 22 revenue, divided by 22 revenue times 360 days, and we get that average inventory divided by cost of sales, 22 cost of sales, then times 360, then average prepaid expenses divided by prepaid expenses, which are selling in general, then times 360. So these have been prepaid about 13 days. We take about 89 days to order our inventory. In fact, this common to order is inventory, and this takes about 15 days to collect funds or to collect money from customers. Then average, say, okay, that's fine. I think made an error there. Average, then divided by cost of sales, and then times 360, then average. So we take on average 81 days to pay our suppliers. Then here divided by expenses, times 360, then here average divided by income tax expense 2022 times 360, okay, which is fine. So now we want to want to project our accounts receivable, so we are going to just take as these ones as they are, 12.9 days, so 80.6, 102.7, 30.0, which is fine. And then here we want to project. So here, before we have to change that, we have to use this we have to Alt HFC, since this is the hard-coded number. We have to Alt EST and F4, then F4, right. Then what else do we want? Okay, and here we just want to say this divided by 360 times 2023 revenue, and we just want to say this divided by 360 times 2023 cost of sales, say this divided by 360 times 2023 expenses, so I just want to do this one with 2023 cost of sales, just want to do the same 360 times accrued expenses, and just want to use that divided by 360 times income tax expense, then we copy that to the right, and then we say working net working capital, then change in working capital, right. Then we subtract that, then to find the change in working capital, which is fantastic. So this is how we calculate the change in working capital, and perfect. And then we go back to the cash flow statement. We just want to add a row on top of accounts payable, say changes in prepaid expenses. Perfect. So now we want to link that. So to link our changes in accounts receivables, we go back here, right, and then we say this minus this, right, and then we copy that to the right. Then we do the same, we go down there and we say this minus this, and then we copy that and we do the same here. 2023 minus 2022. We copy that down there, and here we just need to add another, so changes in income, changes in accrued income taxes. Right, so what we need there is just go there in accounts payable, so 2023 minus 2022, and then we do the same for accrued liabilities, 2023 minus 2022, and we do the same here for income tax, this minus, and then we copy that, and if we add that, and then we copy that to the right, and let's just sum this, and then we add that. Perfect, so we are done there. Then we can go back here, you can see this, and then the other ones. Perfect. Right, so now we are done projecting the cash flow statement. We are only left with the debt section, but we are going to come back to it later. For now, let's proceed to project the balance sheet. Okay, so let's proceed to the balance sheet. So now it's time to project the balance sheet. Five. Perfect. Right, so here hold on top there, and set W like that. Perfect, just like that. And let's write historical, and let's write forecast. And okay, let me just change that. Perfect. And let me just change that. Okay, perfect. So now we have formatted that. It's time to project the balance sheet. So let's just copy that. We just wanna add a top border there, top border, add a top border as well. Add a top border. Perfect. Right, so now we are set to project that. Right, so the first thing that we want to project is cash and cash equivalents, right? So here we're gonna say we're gonna add that. So we're gonna go back to the cash flow statement, cash and cash equivalence affects the cash balance in the balance sheet. So we copy that, which is fine. And then let's project property plant. So we're gonna say okay, that's fine. So we're gonna say this, then we say minus. So we find items that affect the property, plant and equipment in the cash flow statement. Obviously it's affected by depreciation, so we subtract depreciation. It's affected by the purchase, this is the addition. It's affected by the disposal. It's affected by the disposal, right? It's also affected by business acquisitions. So I think we are done projecting property, and then here we just project that. But before I forget, let's just color this, because these are hard-coded numbers, so they should be in blue. So F4, right, perfect. So that's it. So let's now project goodwill. If we go back into the cash flow statement, so the idea is find any cash flow item that affects a balance sheet item, right? So here there's nothing, so we come back here and then we just copy that to the right, and then here we say minus, we come back here, we say minus accounts receivable, because we are projecting accounts receivable. And then here we say this minus changes in inventory. Okay, so this one will say minus changes in prepaid expenses. Then here we say this other assets, this will be affected by other operating activities minus I think that's the only one. So let's go back, I think, right? So if we do this, we say okay, let's just do this. So let's just say minus, we go back here, we see that's other operating activities, right? Other operating activities, what else? Okay, so that's it, and then we copy that to the right, and then we do this. And then long-term debt, for now we just say plus, we come back to here, and then we copy that to the right because it's affected by proceeds. Then here plus changes in accounts payable, and then here it's affected by accrued liabilities, so changes in accrued liabilities. So here it's affected by accrued income taxes. Then we copy that. So this we project that it's gonna be like that. Common stock, because there's nothing that's affecting common stock. Then we've got retained earnings. So retained earnings is affected by net income. Net income, then it's also affected by what else? It's also affected by this. It's also affected by dividends payments, and it's also affected by share repurchase. Okay, then we copy that. Then we've got this is affected by effect on exchange rate. Then we copy that. Perfect. Then there's nothing that's affecting non-controlling interest, so we copy it like that. Then total equity. Okay, so total equity, and then we copy that to the right. So you can see that our balance sheet balances, right? So you see 259 there, total assets, and 259 total liabilities and equity. So which is fantastic. So now that our balance sheet is balanced, we need to work on the debt, right? So let's go and work on the debt schedule. So let's just work on the debt schedule. So let's just write debt schedule, then 2020, right? So like that, and then we move 5, 6, 3, 4, 5, 6, 7, like that. Then we highlight that, and we change that custom, and then we give it H, and then we change that as well. We give it F. Perfect. And then we change the color there. We change the color there. Perfect. And then now we can freeze the panels there. So like that. F. Okay, that's fine. Alt W F, just like that. So let's just add a column there. Alt I say, which is great. So the debt that we've got long-term debt, right? So we've got LTD, opening balance, retirements, or so we've got issue. So here we've got debt, issuance, or debt retirements. So debt retirements meaning debt payments. Then we've got LTD, ending balance, just like that. And then we've got interest expense. Then we've got interest rate. This one perfect. So here, okay, and let's just put that there. Right. Okay, I think it should be here. Perfect. Okay, so here we are going to link, let's just link 20, let's just link that. Let's just link from the balance sheet. So let's go to the balance sheet and link the long-term debt like that. So here, let's format that and put number. Right, then we've got debt issuance. We have to link that. So to link debt issuance, what we need to do is we go to the cash flow statement. Then we've got 2020 like that, and we do that, and then we add that. Okay. All right, so what we need to do right now is we need to, because right now this can be biased for us. So what we need to do is we need to, let's delete that. So we come here, because what we say that what we are saying is the debt 2022 debt, long-term debt, is the beginning debt, right? So here we don't know, we don't have what do you call it, like here. So here we can just find the sum of this. So once we do that, then we take that and we copy that. And at the moment, we don't have any. Right, so now we have to calculate like the interest rate, like what was the interest rate, on the previous date, right? So to do that, what we are going to do is we are going to calculate the interest rate for 2022, and then we project using that. So we are going to say, we are going to go to the income statement, right? This is 2022. Then we say divided by average date. That is in the balance sheet. So in the balance sheet, we're gonna do like that, or in fact, we're gonna just then say average date. Perfect. Such that if we I think that's wrong. I've calculated this is wrong. Then I'll do this. Let me try again. So come to the income statement. I'll choose this, and then I will divide by average date. I'll come to the balance sheet, and I'll do this. Perfect. So here, right, okay, that's fine. So the debt here is 6%, right? So I will just assume that the debt is going to continue at 6%. So let me just italize that. 6%. So here I have to, okay, that's fine. This is a hard code, so I have to take note of that. Right, so now we want to calculate the interest rate, the interest expense. So to calculate the interest expense, what we need to do is we say average debt, that is this and this, multiplied by this, such that we get the total interest expense. But for now, let's so that's it. So now we are going to go to the income statement. So interest expense, then we have to go all the way to the debt schedule and then link that. Now our income statement is complete. So if we go to the cash flow statement now, you will see that right now we don't have any proceeds. So what we're gonna do is we're going to link there, because we don't have any issuance or of some sort. So therefore we have projected the financial statements, right? So let's go back here. So here we see that we've projected our income statement, everything is working perfectly. And then here we've seen that we have also projected our cash flow statement and it's complete. And then we go back to the balance sheet. We see that we have projected our balance sheet and our balance sheet is complete. There's nothing wrong with it. And this is how we've calculated our depreciation. This is how we've calculated our working capital changes. Perfect, our debt. So in the next section, we're going to look at valuation. So thank you guys, and feel free to get in touch with me. I really appreciate your feedback. Thank you so much. Please don't forget to like this video, comment. I really need your comment, guys. And I also expect you guys to subscribe and support our YouTube channel. And that's perfect. So thank you guys. And if you really need help with the financial modeling, here at Funding Capital, we are available to help you. And if you want us to analyze your data and build some cool financial models, then we can do that for you. Thank you so much for your time, for watching. May God bless you.